I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service. Welcome to the show, Ted.
Well, it's great to be back. Jim, I see today is maybe will be I'll go down as some sort of I don't want to say a historic day in central banking, but maybe one to remember. We're getting all four of the past Fed chairs together in New York for a little powwow tonight. That's going to include Yellen, Bernanke, Greenspan, and Volcker. And, this is going to be maybe an event to remember, as it may, perhaps if we're lucky, signal the peak in terms of central bank influence on financial markets and the economy, because they've had a long run here since Paul Volcker took over, crushing inflation back or helping to crush inflation back in the late 70s, early 80s, and we're now where we are with lots of asset price inflation all around the world, but there's some signs that maybe that's peaking out now under Yellen. So it'll be an interesting evening tonight. No one expects that it's going to turn into anything other than a friendly powwow. It's at International House, which is a non-profit organization that actually runs dormitories in various U.S. campuses, and when I was at the University of Chicago, I actually stayed at an International House. So it's certainly a very interesting way to mark what could very well be the winding down of the golden era of central banking.
Was there ever really a golden era? Because so many people say central bankers have caused so many problems, probably caused more problems than they ever solved.
Well, that's right. Perhaps a golden era is not the way to describe it, but maybe the era that opens up the avenue for gold is a better way to describe it, because gold seems to be on a pretty strong rebound. We're seeing really good interest in gold stocks for the first time since 2011. Certainly when we track insider activity in the gold mining space, we're seeing a lot of positive insider activity in gold mining stocks, particularly junior mining. We're seeing a lot of insiders putting their money at work in the gold mining space. So, something seems like we're about to shift gears here in the world economy and in global financial markets. Hopefully that is the case. I can't really put my finger on it, to be honest with you, but just the sense I get, we're seeing a lot of insiders buying in gold companies. We're also seeing some good insider activity in the U.S. in, the gritty basic materials area. It seems like there's some signs out there that we may be about to break through this period where central bankers have been engineering asset price inflation, and we may get back to more of a reliance on actually having to build stuff and create things and look beyond sort of flipping homes, whether it's in Vancouver, or flipping stocks, whether it's in China, or whether it's pick your asset of the asset preference, art. If you're wealthy enough to play in that game, maybe we're going to have to get back to business soon, and hopefully tonight's a starting point for that, for the global economy.
I wonder what the conversation will be. I only chaired the Fed through 3 recessions. How did you do?
Well, or they could count asset bubbles, and on that front, the tallest man in the room, Paul Volcker, would probably lose because, as far as I can remember, he didn't really help spur any asset bubbles. He was, dealing with the consumer price index, and while the other 3 central bankers in the room, Greenspan, Bernanke, and Yellen, will all say the same thing. They're concentrating on consumer prices. In the meantime, they've been giving a huge helping hand to asset prices. And Alan Greenspan started it all with not only the way he started to pump up the economy following the stock market crash in 1987, but when he came to the rescue of long-term capital management in the late 90s, that was really kind of the beginning of the Greenspan central banker puts on asset prices, and really kind of shifted priorities of these policymakers to using asset prices as a way to try and engineer outcomes. And what we've experienced since then is, it's been great if you're a homeowner on the west side of Vancouver, especially if you bought your house today. Alan Greenspan, assumed control of the Fed, but not so great if you're a millennial looking to, stay in Vancouver, work for a living, and raise a family here. There's been a huge generational windfall under these policies for some people, for those who are who were able to invest in assets, and there's been a huge cost for those who were unable or too young to acquire assets, which are so expensive right now. So the global economy is probably due for a shift. It may be wishful thinking on my part that we're near that point, but we are seeing some signs that the central banking era is near an end. And if this event tonight at the International House in New York isn't enough, perhaps the experience the Bank of Japan had earlier this year when they tried to juice their currency by going into negative interest rates, and all that set off was a massive run in the other direction. The yen is soaring. It's soaring today. It's doing everything the opposite of what the central bank in Japan had tried to do. I think a lot of these central bankers are now quite shell-shocked in terms of the limits of their power. So they're either going to have to double down and give it one more blow here in asset markets to really keep the game going, or they're going to sit back and go, okay, politicians, it's your job now. We've done everything we can, and you're going to have to do it. Now we've kind of seen that in Canada, although it wasn't the Bank of Canada that asked the Trudeau government to try and boost the economy. It was in the election that the citizens decided that they would go with a more activist type federal government, and so it was actually the electorate that made the choice. And as a Canadian, whether you voted for one party or the other, at least it was a democratic process that made that decision. Fortunately, in Canada, we had that opportunity. In other countries, there may not be. It may be forced upon them. So, we'll see how this plays out. But certainly, the way the yen's behaving, these central bankers, who first and foremost, do care about their careers and their place in history. I don't think anybody wants to do a move like the Bank of Japan did and see things sort of blow up in their face the way it did. It was, the Bank of Japan has a lot of work to do now following its last policy failure in terms of what it was trying to accomplish.
Well, I hear the Japanese government was the big winner from negative interest rates because people had to pay to have their money stored by the bank. The banks had higher profits, which they had to pay taxes on, so the government made money on negative interest rates, but of course the person with the money in the bank didn't. Also, the big reaction in Japan was everybody went to the bank, took out their cash, and put it in a home safe, or at least they don't lose money.
Exactly, and this is one of the reasons why the yen is strengthening. People want their yen; they don't want to leave it in the bank. There's a history also of currency devaluation in the banking system in Japan after the war. So there is some history there that people are a little more skeptical putting money in the bank than they are in other jurisdictions. But the big loser in terms of banks has been Europe, where Draghi went to negative interest rates, and that's been a total disaster for Europe. And it's interesting to hear the reasons why some people ascribe to the fall in bank shares in Europe, but having negative interest rates has just been a very, very costly situation for banks in Europe, because they cannot pass along negative rates to their customers. They have to eat the costs, and there's probably after seeing what happened to Japan, Draghi decided in the last go around that they would not cut further to any major degree. Instead, they decided to move on to corporate bond purchases, which has a whole other set of issues. But on balance, I think the central bankers are coming to grips with the reality that they've kind of come to the end of their road, unless they're really going to make even riskier moves that could have even bigger blowback consequences.
Well, ask the people of Argentina or Brazil how these measures have worked out for them. In Canada, at least we have a big enough and solid enough economy that perhaps, we can survive the blow to the oil patch. But for Brazil, which was almost 100% dependent on commodities, it's been a disaster.
Well, and Brazil has, a few corruption problems. So, they don't have the institutions to fix the problem. And, it's not even clear that if you were to replace the current government, that you'd have a viable opposition that could take over, as a number of the number of questions are also surfacing regarding some opposition players. So Brazil's in a mess, and it just goes to show you how you have to always keep an eye on corporate governance to ensure that that we have a high degree of that in our society. And that's one of the biggest complaints I would have about the Bank of Canada, is that there's very little corporate governance with that institution. Yes, the Bank of Canada governor goes to the Senate and the House of Commons and gives a report, but Jim, these parliamentarians, they're not experts on monetary policy, and to have central bank being essentially accountable to a group of lawyers, because most politicians are lawyers, is really suboptimal. And I think we've been lucky in Canada that we haven't gone into experimental monetary policy. I think that Polo's is quite willing to go there, and he would have gone there had Harper got reelected. I don't have any doubt that if we had a conservative government, that would be on the path to negative interest rates, because they were unwilling to shoulder the job of boosting the economy on the fiscal side, and which is fine. But what I would ask people who are in favor of balanced budgets at any cost, the fact of the matter is, even a socialist can balance a budget if they raise taxes high enough. And if you are going to try and get your economy going through intervention, then I would rather have an elected official such as the finance minister do it, so that I can hold that person to account. If you hand it off to the Bank of Canada, I cannot vote against Stephen Poloz. I did not vote for him to be there, and I cannot vote to get rid of him. So to hand the power over to the central bankers, who are unelected and unaccountable to the people, to try and manipulate the economy into growth, I would really challenge conservatives to think about that, especially as they're picking a new leader, because monetary policy tends to get swept under the rug, but it's very important, and it can have long-lasting impacts on an economy. And negative interest rate policies that are being implemented in Europe are a disaster. And that's going to have, and they can't get out of it now. So this is going to get them into a mess. And it is already a mess. Their banking shares are tumbling. Japan is another example of, asking the central bank to do too much. So, we're just fortunate in Canada we haven't gone there, and hopefully we won't go there. And, and if you don't, any of your listeners who are unhappy with the way the finance minister is behaving in terms of policy, well, fortunately, we have an election, in a couple of years, and people will be able to make their displeasure known at that time. But if you leave it all up to the central bank, you don't have any say, and that person has a lot of power. And in Canada, it's one person. It's one person who pulls the trigger. Yes, there's a committee, but that committee does not have the legislative authority to make an interest rate decision. It's one person. It's the central bank governor, and that central bank governor is unelected and unaccountable to me. And, the system that was put in place was devised many years ago. It was, the Bank of Canada Act is decades old. And we've come a long way since the corporate governance structures were set up under the Bank of Canada Act, and I would argue that it needs to be overhauled. And hopefully somebody running for the leadership of the Conservative Party will address that, because it's an issue that's out there that no politicians in this country has seemed to want to touch, and there's a good opportunity for an aspiring candidate who wants to lead this country to bring some more accountability to the central bank in this country.
We'll have more with Ted Dixon right after the break.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Bird Dog and the Vintage Electric Band coming to Mission, White Rock, West Vancouver. Buy online and save at ontourtickets.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking to Ted Dixon. Ted, you said you like to be optimistic. Well, what has you optimistic right now?
Well, I'm optimistic to see that insiders are buying, as I mentioned earlier, sort of these gritty mining and basic material stocks in the U.S. and mining stocks here in Canada. So there's a large number of officers and directors of companies across North America who believe that things are going to get better, at least nominally. When I say nominally, I mean that the price level of their goods will be going up. So now, does that translate into real growth? That remains to be seen. But given the fact that in 2016 the U.S. dollar has not been able to surge higher, that the U.S. dollar index has failed to break through 100, that reduces the risk of a deflation in North America substantially. And so that suggests that, if anything, we may be faced with more risk of inflation than deflation. And for those companies that sell hard assets, such as on the hard commodities or soft commodities for that matter, but those companies, that sell stuff like steel and copper wire and chemicals and all those unglamorous things that don't really get a lot of attention on on the front pages of the business section or on certainly on American business television. Those are the things that could benefit if we have a more inflationary environment. And Jim, there's been so much central bank intervention and money printing, and now a lot of that money has just been sitting idle. It's kind of like a whole warehouse full of gunpowder that's just been piling up. And everyone says, well, what's the problem? Nothing's exploded. But it doesn't take much to set that off. And once it gets going, it is hard to stop in terms of putting out the inflationary fire. Now, I'm not suggesting for a moment that we're going to have like a hyperinflation. But the fact of the matter is that if inflationary forces set in, it does take a while to calm them down. Now, and the current situation, I don't think it would take very much. But I think central bankers are going to be reluctant to do much, actually, given the experience of the Bank of Japan earlier this year. I think caution and kind of going slow at policy moves is what we're in store for. That should potentially allow inflationary forces to build a little bit, and that would be good for Canadian stocks and also for a change in leadership in the U.S. where you would see these kind of material stocks leading the pack as opposed to biotech and some of the frothier social media names that have led the way in the past 7 years. So you would be moving more towards sort of the grittier part of the economy, which would be I think a constructive development for those who are looking for the bull market in stocks to continue. I think you need a change in leadership for that to happen, and that's a scenario that I see that might play out, and I stress might because in terms of conviction levels, I think one has to be aware that the risks are so high that there is still a chance that we could end up in a recessionary environment in North America. Technically, we've already had one in Canada, but I don't think the U.S. is out of the woods yet. Labor market conditions, when you scratch below the surface, are not as healthy as they seem on the job market. Releases that you get on the first Friday of every month. If you look at the Fed's own labor market condition index, it's been negative for 3 months in a row. The last time that happened was in 2009. So, there are some worrying developments in the U.S. as well. So I would give it a 60-40 probability that we're going to see a bit of a reflation here, and that reflation could easily turn into stagflation, which would not be great. Or if you had a recession, then we could be back to sort of the worries about deflation again. And if China has to devalue, then we're really going to be in a pickle. But I see that. I see that as being the China devaluation scenario. I see that being off the table for now, at least until for the next few months. And that's a positive development that the U.S. dollar is kind of cooling off here. That China's not devaluing. Those are all positive aspects that could really kind of give the materials and the mining and to some extent the industrial and even perhaps the energy sector a bit of a boost, although I wouldn't want to overemphasize the chances of energy rebounding strongly over the next few months. I think we're going to just have to see how the supply and demand equation fixes itself there, and to predict when that's going to happen is certainly a very tough call.
China reports that for the first time in 5 months, its foreign reserves have increased. Is that a sign that the bleeding there has slowed down or stopped?
Well, it's certainly a healthy data point. And we saw the manufacturing survey come in positively. So, 1 month doesn't make a trend, but certainly it's better than having another month of negative data. And given that, again, that the U.S. dollar index has failed to break through 100, I think so far in 2016, that is the story of the year. It's not oil. It's the fact that the U.S. dollar has not been able to rally significantly and is now either is falling or is consolidating. That is a very good development for the global economy, and gives us a fighting chance, Jim. That we can see that change of leadership I was talking about. Doesn't give it a slam dunk. Doesn't make it a 100% certainty by any stretch of the imagination. But it's a positive development, and certainly something that would help our Canadian market. So so far year to date, believe it or not, Canadian market has outperformed the U.S. market. It's true, and even with the currency, so it's true. That in Canada we are getting back on feet here. So we'll see if that trend lasts. But despite the risks, it's looking decent that we can do it. But again, there's always the risk that the data could take a turn for the worse here.
Canada's parliamentary budget watchdog has commented on the Trudeau government's plan to run $30 billion deficits for the next 5 years. He said it won't create the number of jobs as predicted. It won't create as much economic impact as predicted. But he said the economic growth in Canada should be better than what the government predicted. So all these people weigh in with figures and estimates, but we don't know how this is going to play out until the 5-year term is over, do we?
Exactly. That's why even with here, I've been talking about the next few months, in the markets, and I'm, willing to say, well, maybe 60-40, and I could be wrong, and there's oil, we don't really know. Yet, in that budget, you're supposed to make a projection on everything. You're supposed to make a projection on growth and oil and jobs, and you're just gonna, if you can get half those numbers right, you shouldn't be in government, you should be in private forecasting. So, it's a tough call. I wouldn't put a lot of stock in any of those projections. I would look at it 1, maybe 2 years out at most. But the ultimate test is: do you feel comfortable with the direction that the government is taking? And I come back to the fact that we can have our say in 5 years whether they're filling their mandate or not, and whether they've done a good job at it. And it sound like a broken record. I don't get that with the bank. I don't get that right with the Bank of Canada. And as a citizen, it's a right I would like to have, at least to know that institution is being governed more effectively than it is now. Because right now, I think it's basically out there on its own with very little accountability. And as a society, I don't think that's good for the central bank, and I don't think it's good for a lot of these agencies. When you look at for example, the port authorities, who holds those port authorities to account? There was an oil spill in the Vancouver Harbor not so long ago, but no one's really held accountable for that. And those are the types of governance issues that, as a society, I think we have to be very mindful of, and always looking to ensure that we have proper governance of our institutions.
Ted, thanks a lot for chatting with us.
And you have a great weekend, Jim. Let's hope that this sunshine continues and has a little impact on the global economy as well.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Comments or questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.